Hi, good morning, everyone. Louis Porcelino, Man Over Market, and today is the 7th of December. Pearl Harbor Day. Pearl Harbor Day, right? What, 70-something years ago? So remembering all the vets, my uncle, my dad's oldest brother who died at 91 was in the Air Force. Was in the Navy, and he was a gunner on a ship. So he told us a lot of interesting stories about World War II. But I want to remember that. The other things going on throughout the United States, President Obama responding to the terrorist attack in California, and this becoming a really heated issue when it comes to guns and what we need to do to protect ourselves, even to the point of what's going on with social media and how the terrorists talked encrypted messages and so on. So very interesting times in the United States right now and in the world, so affecting the market. So overview on Friday, good jobs report. The market reacted positively. It just seems like when these markets react, they go, it's like, they all have to be buyers. They all have to be sellers. There's not any sort of continuity sometimes, because they can't just, like we've been saying if you've been following me for a couple years, I don't believe markets just trade straight up and straight down, right? They have to have, there's ups and downs and consolidations in there. So still the Fed on the 16th, I believe, is going to come out with the quarter point rate hike. Not sure how that's going to affect equities. I think we may have a downturn because of it, but Janet Yellen could back off on that based on what's going on in the world. S&Ps, made a high overnight, got to the levels where we have to get through. We'll show you and we'll talk about that. Oil below $40. You know what? I don't want to brag about this one, but I've been talking about this for the whole year when we first went under $40, that oil is going to make some sort of low that I call it the stupid low. And I think oil is going to, go down to like $25. And that's where all the pain will set in. We'll start seeing some defaults. We'll see some consolidations. And then eventually that's going to be about a 2 to 3 year cycle before oil gets back to the mid 50s to $60 area. So good for us, right? I guess it's a two-edged sword. It's good for the people that are putting gas and heat in their homes. But then again, it's also, caused by global slowdowns. A lot of, Brazil, Argentina, a lot of, these economies that were based on oil, a lot of turmoil, like 150 and 170% inflations, scandals, a lot of things going on around the world. So going to make for interesting times for the next decade, or at least the next 5 or 6 years, right? All right. So let's get into the charts. This Friday, we're going to go live with the new site. We'll start the trading funding program on the 1st of the year, or after the 1st. And then also, but our chat room and things like that will all be available this Friday, the indicators and so on. And we'll, if you got questions, Anthony's been doing a good job answering the questions and so on. So the S&P right now hitting a really, like my do or die area. The rally started from this. So let's go to the charts. And the afternoon rally started from this point where we're at right now. And I think we're looking for a little bit of a retracement right now. So let's take a look at that. Go to share charts. Let's go here. Let's go share. Let's open this up. All right. So we've made an overnight high right now of 20.95.5. That's a double top up there. Okay. Now looking here. All right. And so I've put in this shaded purple area because when you look at it in the afternoon, this is where the second wave, this is the high that we went to when the market was down at trading at the top of value, and I put out that the market's going to a target of 2084. All right. So we now got a bunch of single prints here now from 2082 half down to 2078. Okay. So they filled in single prints with single prints. So, and created some more. So you got to take a look at that area. All right. That's why I've drawn this shaded area from 2085.75 down to 2083 half. I think the market will have to, get down below this, which is, make new Globex low. And if we get down into here, this 82.25, we should go down and fill in these single prints. Okay. Like I said, and this is an HVN down here at 2078. Okay. And we created this great big buying tail from Friday afternoon. So, like I said, I look at these things and I just, it amazes me that I guess that's the problem now when you have algorithm trading, that when they all get in the same way. Let's mark these single prints so we have them. All right, so I'm going to do this. And so we have that. So from basically 2062 half to 52, so you got 1,000 points down there, which is not always good. Let me get rid of this. Remove, and we're in good shape. Okay. So, when I look at the top, all right, I mean, we just got all this. We have all this baggage up here. We got the some unfinished tops. We got 2 single prints, and then I drew this purple area early this morning. Let me see if I can want to keep the integrity of the chart. All right. So this is my next trading area we have to get in and maneuver through before we can just keep going up again. All right. So it's 97.75 to 21.75. So I drew this early this morning, like I drew that other purple market. And then above that, then of course we would have up to 21.07. And then I've been saying for a couple months, or at least a month and a half now, that 21.13 is the key on the upside. All right. So when I look at the chart today, we are actually trading in the middle of value. Okay. I've got here the bull bear zone is at 2084 half. So we're right there. I got a point of control of 2089 half. I got a top of value of 2092.75. And I've got the bottom of value at 2071.25. 2071.25. All right. On the Globex session right here, we have the pivot, okay, is in a cell above us. So I'm going to go and now switch the data series, okay, and I'm going to go back to here, and then I'm going to go to, all right, Globex regular trading hours, hit apply, hit OK. And I'll wait for that to make it. All right. So then when I do that, okay, we can see that the 5-minute pivot closed the day at 2082 half. All right. So remember, I always think about equities as since they don't really trade overnight, that what happens overnight is important, but really, I really want to see what's happening during the day. So the pivots are being taken out during the day, or that's more important to me than what's happened overnight, right? But I do always look at the overnight when it talks about Globex highs and lows, and then where the array, where we think that the ranges are going to be set at. So if you do that, we go to the regular trading sessions, 2082 half, the pivots in a buy, we'd have to take that out and it would go negative. But in the overnight, we are in a sell. And these are the things that you're going to learn when you get either in the trading program or you buy the indicators and you come into our chat room when we talk about how you use the pivots, because sometimes they're actually trends and then sometimes they're actually targets, right? So you're going to have to, and they're accurate once you learn how to use them properly. So this is already in the regular trading hours. So this is the Russell, all right? And they're remaining in a buy down here at 1176.90, okay? 1176.90. I suspect if I and the Russell is trading right in the middle of their value. And I got a bull bear zone at 1180.70 for the Russell. Okay. All right. Let me go here and go to the NQ. NQ. All right. So let's see what we got here. Well, so it's finishing a buy way down here. Okay. This is regular trading hours. Let me go and let me show you the difference here. If I go in here, all right, regular trading hours. Let me go to the extended hours, and so we can go to index futures extended hours. Okay, I can click on that, hit OK. All right, so now that will give me, based on market movement, you have the 5-minute pivot in a sell. All right, so these are the things, the nice things that we've done over the last 30 years or 20 years. When we develop these things, we kind of look at multiple markets. We like to look at how the market's affected. This should give us a pretty good idea right here, 42.25. Are we gonna get above the value? And so on. So, and then, which will be different now when I go back here, right? I go to the data series, and then you can build as many charts as you want. You could build a data series that has regular trading hours, and you could have a data series that has, I'm sorry, you could have one that has extended hours, right? So, and then you would have the pivots in front of you at different times, okay? So you just go to regular trading hours. I'm going to go back to that, hit OK. All right. So I already know I'm going to be looking at this. I'm going to leave it on this at 46.99.5, right? I know where my value is, and I'm going to leave this like that because I know that that it's already taken out on the sell. I'm assuming that most of these are taken. It's the Four Sisters and the S&Ps are in a sell based on the move we made off the top, right? So this is the YM. Let me see what we're at here with the YM. Let's go to data series to make sure we got the right one. So regular trading hours, okay? And so you fully understand that if I went here and I went to the extended hours, any questions coming in, Ant?
So there's one question. So for your day trading purposes, are you looking to buy or sell ES since the 5-minute trend is different? I know you don't give away your trades, but
all right. So I've been saying that I'm bullish. So right here we got the 5. I'll get to that, right? Okay. So 5 minutes right here. Okay. So I got a 5-minute pivot that's up above. If I use the extended, let me go back over here and let me go back to the data series, and I'll get to the question in 1 second. Okay. All right. So I am gonna go back to the index futures regular trading hours. I'm gonna put this in, and then I'll have. All right. So, this is all about developing plans, right? So when I take a look at developing a plan, so now I'm going to be looking, and I'm going to be. I know that on the overnight inventory, I'm looking at we had a real big uptrend. We made a high, didn't take out the older highs, but I've been telling everybody I think that the market, if it gets we got 3 weeks left in the month, and I've been trying to say I thought the market would take a run at the all-time highs, right? So that I've been kind of bullish, right? Like I've been bearish oil, right, and bearish gold and bearish bonds. The bonds actually I don't really have an opinion on because it's manipulated by the Fed, so I just keep my mouth shut about the bonds, right? So at the end of the day, so now we're going to develop a plan, right? So obviously, if we take out this 2082 half on the 5-minute pivot, that's going to confirm that we're looking for some sort of retracement, right? So remember, I don't like the idea that, you know, the way the algorithms trade, but come on, do you guys really think that this is the way markets should trade? So I'm looking here. All right. So if I can't get one of the things I don't like to do is I won't trade against my pivots, right? I won't trade against them. So if they're short, okay, and I don't like being short, and my opinion is, you know, and even all my stuff is in here telling me the CCI read, everything's telling me I got to be short. If I don't not comfortable with the trade, I just don't take it, right? So that's one thing you got to learn. The second thing is, you know, when I look at this, is that this market can retrace back to here, okay, right, 27.8. I even said it the other day. I thought the market could trade to 2050 when it was down there and still be positive on the year. But what I don't like is when they do this kind of stuff. When they, you know, you get all this, you get all this institutional buying, and this is what causes this institutional algorithm to keep you along. And then the market doesn't retrace, right? So what I will do is if I am, you know, if everything is short, and since I have a long time, you know, like, you know, the next 3 weeks, I think the market's rallying. See, what's going to happen is these nitwits and these guys that control the market now, and I call them the nitwits because, you know, they all get to, you know, manipulate the market and because they've got all kinds of money sitting in funds. So, you know, what they like to do is to scare us out on the bottom, and then they rally it. And that's why, if you listen to my video on Friday, I was like, look, I don't trust this break. I think it could go down to 2041. And I'm still thinking that the market could go, you know, go higher and so on. And then I gave you that point, 2062 half, that if we got above that, that's my first clue, right? So here's my first clue right here. I'm telling you right now, this is my first clue, below 2083 half, all right? I think that the market can retrace and go back down into this area and certainly into here, like the 2073.75 area, right? So when we go and we look at that, and I'll look at the pivots. So, I mean, I think it could certainly go back and test the bottom of value and still be a buy, but you just got to be willing, you know, to stay out of the market until it turns up again, right? You don't want to step in front of it. Remember, you know, you can't pick lows and you can't pick tops, right? Because when you start picking highs and tops, you're gonna get yourself run over, right? Unless you're a fund that's got a, you know, a couple $100 million and you're scaling yourself in, right? So I don't, you know, since we're trying to be flat by the end of the day, you got to really kind of stay with whatever the market movement and momentum is going, right? So if we take out the 5-minute pivot, okay, and let me just for shits and giggles throw in the 15-minute pivot, okay? Let me just get an idea where it's at. All right. So lo and behold, if I look at the 15-minute pivot, right, it's down here near the bottom of value. So I can envision us going down on the opening and getting down in here, and people think, all right, you know, we're gonna, you know, we're gonna have to take this out. We're gonna have to take this bottom of value out to keep going, right? So, but a trade from where we're at now to the bottom of value, you know what? If you're not comfortable being short, see what happens down here. See if they have enough gumption to get that out, right? So I hope that answers your question, because you gotta understand that, you know, one of the things that I learned on the floor was that once you became a professional trader, I was an exception because I grew up, you know, I remember when the Dow went through 1,000, right? So I was there in '87. I remember how, you know, I like buying the market. Okay, so I'm gonna look and see what kind of consensus I get with all these today. And today may be a range bound trade that is going to be, you know, one of these days where we can buy and sell the extremes of value. Okay, and the market just keeps returning to the middle, especially after what happened on Friday. So that's the way I'm looking at it. Hopefully that answered your question. Any other questions?
Nope. That's it.
All right. But, you know, the key is I'm going to let these things that, you know, that we've been testing, and the CCI and pivots and our M3 indicator here. I'm going to look at these things. I'm gonna look at VWAP, where I'm in relationship. This also calculates S1 for us, S2, and I'm gonna look at those levels and see how the market's performing and profile to see where I'm gonna make my short-term trade, right? I mean, if I could tell you guys right now, you know what? You can make 4 points on a 5 lot every day. Would you take that? That'd be about $1,200, right? Right?
Yeah.
4 points on a 5 lot.
It's $1,000. Yeah, $1,000.
It's $1,000, right? Would you take $1,000 a day and go to the, you know, based on where you're at? Casino girl, I don't know where she's at. She's somewhere near a casino, but are you people there in the warm country? Would you take that money and just be done, you know, at noon and then go live the rest of your day, right? All right. So those are the things you have to be able to do, right? We you know, unless you're going to be a position trader and a swing trader and stay with trends, you got to just look how you're dissecting the market, right? And get opportunistic times to get in, take your snippets and take a little money out of the market every day and be happy, right? And the one thing that's great about the markets right now and all the turmoil and the volatility is this is not going to stop. We're going to have volatility for the next 5 years. You think the commodity market's going to stay on the bottoms down here? So that's great. That's what we want. We want volatility, okay? And the more algorithms that get involved in it, the more volatility we're going to get in it. And you know, the best thing that happened is all these hedge funds got beat up, right? So they realize they're not geniuses either. So, all right, everybody. Everybody have a good day trading. And it's coming. The time is coming. It's getting close. And some of us will be with us the rest of their trading days, and some will not want to be with us. But we will enjoy having you with us. So, all right, everybody, have a good day trading. Talk to you later. Bye.